Good morning, everyone. Thank you for joining us today. My name is Avery Zuvik, and I am the Director of Community Impact at United Way of Westchester and Putnam. United Way fights for the education, income, and health of all members of our communities. Our work positively impacts hundreds of thousands of individuals and families every year. And we are really able to accomplish this by fostering collaborations with other community stakeholders, leaders, and partners. And that's why we're here today. We're excited to partner with M&T Bank and Urban League of Westchester to provide a virtual finance seminar covering budgeting and credit. We hope you find this information useful. Our M&T presenter today is BJ Bumactao. BJ is Senior Branch Manager at M&T Bank in White Plains. Previously, he worked with Webster Bank, Citi, and People's United Bank. BJ is president of Stanford Dollars for Scholars, a nonprofit that provides scholarships to local students who want to pursue education beyond high school. BJ holds a Bachelor's of Fine Arts from the University of Bridgeport, and I'll now pass things over to Harold from Urban League of Westchester so he can get us started.
Oh, Harold, I think you're muted. Did he hear me?
I don't think so, Harold. We can't hear you. All right, Harold, I think I see your phone. Oh, there we go. Sorry about that. All right.
You hear me now?
There we go.
Thank you. That's all right, no problem. Hey, good morning. How you doing? I'm Harold Eastlam with the Urban League of Westchester. We thank you for this opportunity to you come in and and help develop our people. Is truly a blessing. So most of our people here, they're going to be they're receiving, let me just say it like this. They're all in their own particular struggle. And this here course, this here financial literacy training is going to be excellent for them because most of them are transitioning from one place to another. And it's good to have this under their belt so they can get a better understanding of finances and how to better budget and, to learn about credit. These are the things that they need to continue to develop in their life. We have a few people on now. We're going to be getting a few other people that's going to be coming on. So we want to thank you, M&T Bank, and we want to definitely thank you guys for coming in and helping us out. And it's just truly an honor. And Katie, we appreciate you. I got some people coming on now on my Zoom for Strive, and I'm going to be transferring them over to you. So it's just a blessing that you guys come on, and we say thank you. So that's all we have. Anybody want to add anything else? Is there a specific question you want to ask me? And hopefully I can answer it. Is that a yes or no, or maybe so? Can you hear me? Can't hear me.
We can hear you. I'm just letting everyone know if they want to ask questions to please do so in the chat. And then we can, as BJ is giving the presentation, we can run some of those questions by him.
Okay, so as I say, I'm going to have a few more people joining us. The class may fill up. Once again, definitely appreciate the United Way. Katie, you've definitely been a blessing to this program, helping. And what's so good, it's a new class all the time. So it's not really an issue if budgeting is coming. Good morning, Ms. Hawa. I got some other people coming on, so I'm going to be sending them over. If there's any questions for me, you can put it in the chat. If there's anything you're curious about, hopefully I can answer it. But as I say, most of our people are transitioning from one place to another, and to have a program on budgeting and financing is truly a blessing for them.
Perfect. Thanks so much, Harold. We love working with you too. I don't know if BJ, you want to kick it off?
Okay, great. Can everyone hear me? Give me a thumbs up, please. Awesome. So thanks for having me. My name is BJ. I'm with M&T Bank. For the next 8 hours, we're going to go over the fun basics of banking. It's an exciting time. That was a joke. We're only going to go over it for an hour. I try to be as interactive as possible. So, please don't hesitate to ask any questions. Banking can be boring, but it involves your money. So it's actually extremely important. It involves you being able to buy a house. It involves you being able to buy a car, being able to go on vacation. So it's extremely important, and I take it very seriously, banking basics and budgeting and credit scores and everything. So with that being said, I'm going to start sharing my screen, and we're going to start the banking basics. Second. Share. Okay, hold on. Okay, can everyone see my banking basics screen? All right, awesome. Okay, so step one, this is Banking Basics 101. So forgive me if this is going to be really remedial. It's a general presentation, so if I'm not getting any questions, I'm going to move pretty quick with the presentation and tailor it to people's questions. So in this goal today, you're going to be able to identify different financial institutions, what the difference between a credit union is versus a financial institution like M&T Bank, Citibank, and Chase Bank. Ways financial institutions.
Oh, I'm sorry. I think we're on your Zoom screen.
Oh, we are. Okay, sorry. Here.
No worries. Thanks so much.
Can you see my presentation now?
I don't know if the screen might be frozen a little.
It may. Hold on one second.
Do you want to try unsharing and resharing?
Yeah, let me stop sharing, and then I'm gonna try going into it again. And by the way, I much prefer to do this in person. As you can tell, technology never works when it's supposed to, so we're gonna try to work through this. Give me 1 second. It's not working. Yeah, that's weird because it's not even showing me the I can now see your screen. How about now? Can you see it now?
It's the Zoom screen right now.
It's still the Zoom screen. Yeah, that's really weird. Okay. Okay. All right, that's okay. So we don't need. I can go off of it, and I'll go off of the presentation that way. It seems like I'm already seeing questions about credit and building credit, fix our credit, and everything. I kind of knew this was going to happen, but if we can get it to work, that's fantastic.
I think I might have it in my email. I might be able to pull it up. If you want, you can. Do you want to jump into that first question a little bit, maybe? And I'll.
Yes. So first question, what type of services does everyone use at financial institutions? Does everyone have a checking account or a savings account and everything? Now's the time to unmute yourself so that we can have an interactive conversation regarding this. Does everyone have a bank account right now and everyone has a savings account? Give me a thumbs up or something. Okay. All right, so that's awesome. So it seems like the majority of the group here, if you want to put your comments in the chat screen as well, will give me an idea of everyone's comfort level with banking and everything. So it seems like everyone has a bank account right now. They know what a bank does. So everyone knows that banks are great because they can protect your money, right? It's FDIC insured, meaning that even if the bank burns down, their money is federally protected, so there's no risk of loss of any of your funds. Also, they help with fraud, so that if God forbid, like if your cash gets stolen out of your mattress, there's no way to get it back. Versus if it's stolen out of your account, you're able to file a claim and get your money back. So that's why financial institutions are fantastic for that. Now, does everyone know the difference between a credit union versus a bank, an actual bank? No? So the difference between a credit union and an actual bank like M&T is credit union, you have to be a member to bank with them. So it's called a members only type club, let's say, and you can't use any of their services unless you actually have a account with us. Whereas a financial institution, you can use ATMs with any bank as long as you pay fees and everything. All right, so that's the real main difference between a credit union and a financial institution. All right, so we can keep going. Now, all of us, we all accept cash. We all can do wire transfers. We provide loans. We provide cashier's checks. All your money is insured up to $250,000, and that goes for banks as well as credit unions. There are ways to structure that FDIC limit to be increased by titling it differently. So there are different ways to do it.
BJ, I'm gonna hop in for a second. I have the presentations that you sent me, so if you'd like, I can
Awesome.
share. Which one were you gonna present first?
So if you want to go to slide 7, please.
Of the budgeting one?
Yep. Sorry, banking basics.
Banking
Apologize.
basics. No worries at all. Give me one moment and I can get that up. And banking basics.
Yep.
Okay, can everyone see my screen now?
Awesome.
Perfect. And you said slide 7?
Yes, please. Okay, so this is where I'm going off of. So banks generally have more locations. I know in New York City, if you've ever gone to Manhattan, there's a Citibank on every corner. There's a Chase Bank. There's a Bank of America. Credit unions have a lot fewer locations because they're a members only type group.
I'm sorry, was this slide 7? I'm sorry, I just went through.
Yeah, that's fine. Yeah, that's fine. We're still talking about the main difference there. If you can go to the next slide, please. And next slide, please. Okay. So this is the insurance for both type of institutions that I was talking about. FDIC is a Federal Deposit Insurance Corporation, and that basically protects all your money up to $250,000. And the NCUA is for federal credit unions as well. So that's the only big difference. They just have different names. They both do the same thing. Next slide, please. Okay, so only depositor accounts are covered under the FDIC insurance and NCUA insurance. Stocks, bonds, variable life insurance plans, they are not covered because they are considered an investment. Okay, so you can potentially lose your money if it's in stocks or bonds or anything like that. Okay, so next slide, please. Okay, life insurance product, treasury bills, safe deposit boxes, mutual funds, those are not covered under the FDIC insurance. Next slide, please. All right, earning interest. So does everyone know what compounding interest means? I'm looking for on the chat. So in compounding interest basically is making your money work for you. So let's say you put $10 into a savings account and every year you get $1, in interest, let's say. So compounding interest year over year, instead of $10 earning you interest, it becomes $11 earning interest. So next year you could potentially have $2 in interest because that interest is basically earning money for you. It's letting your money work for you, basically. And that's kind of what interest growing is. Anyone have any questions with that? Okay, next slide, please. All right, so everyone also, I took a quick poll when we first started. So everyone seems like they already have checking accounts and savings accounts. All of that's already in there. So if you have any questions with that, please, let me know and I can answer those questions. The difference between a checking account is it allows you to pay your bills. Your checks are linked directly to it. You could access your ATM card through there. Savings accounts are basically allows you to earn interest on your money. It compounds your interest as well. So next slide, please. Okay, money market accounts are basically higher interest savings accounts. Now CDs are a different type of like a savings account with a time requirement to it. So has anyone heard of like a 1-year CD? That's basically what it is. It's you have to keep the money in there for 1 year in order to receive the full interest that was agreed upon when you first opened that CD. Okay, now if you generally break the term on a CD, they can actually charge you a penalty for breaking the term on the CD. Okay, next slide, please.
Could I ask a question on this slide? I'm sorry to interrupt.
Yeah, please.
I'm just wondering, like, what are circumstances where you would want, per se, a money market account or a CD instead of like a checking or a savings account?
So money market accounts will give you a higher interest rate than just your standard CD. I'm sorry, your standard savings account. Most people use money market accounts if they have a short-term liquidity need. And liquidity is basically like if you need the money to be able to be used for a purpose. Is basically what that is. So you generally want to put it in a higher interest-bearing account so that you can use it for a future project. Does that kind of make sense?
Yes, thank you.
All right, awesome. So next slide, please. Okay, joint owners and custodial accounts. Does anyone people who have checking accounts, do you have one owner or one signer on the checking account? Okay, cool. So a joint ownership account basically is having full rights to the account. So a husband and wife can have a joint ownership account on their checking account so that they have full ownership. So God forbid one of them was to pass or unfortunately dies, the rights and money in those accounts would go directly to the joint owner. Okay, so it's a way of continuation so that the funds don't become lost out there. All right, so everyone understands what joint ownership is, right? So it's equal ownership in an account. If someone was to pass or die, then all the rights of that account would go to the remaining signer on that account. Okay, a custodial account. So parents and guardians may open an account in a minor's name. So those with kids, if you want to open an account for your 7-year-old and start a savings account, you can do what's called a custodial account. And what that is you can open it under your name. So you're what's called the custodian, and your putting money for the benefit of your child in a savings account so that you can earn interest for them. Because they're too young to transact on their own, you're going to be the custodian, you're the manager of the account. Okay, what happens with the money if you are the only owner on the account and you die? That's a great question. Generally, what happens is, so your executor or administrator of an estate. So if you pass and you have substantial assets, generally all your assets will go into an estate. And if you don't have a will or any binding contract, it's going to go into this estate account, and the court will assign to you a administrator or executor of the account, and they're going to determine, if you have any remaining relatives or family members that those funds will go into. If none of that happens, the court's going to basically determine where your money's going to go if you don't have that will. So it is important to have that. Okay. Did that answer your question, the rights? All right. So next screen, please. Okay, consider the following. Who is the account for? What will you use it for? Everyday transactions or long-term savings? If it's a savings account, do you have a basic money market, CD, or share certificate? Okay, so when you walk into a bank for the first time and you open an account, basically ask yourself these questions. Do you need a savings account, or do you need a checking account where you're going to do everyday transactions, pay your bills, use a debit card to buy things, that kind of stuff? Okay, so these are questions you generally have to ask for. Next slide, please. All right, so we're going to go into some scenarios, and give me on the chat exactly like what your answer would be, right? So Ali has been saving for his daughter's college fund. He has about $20,000 saved and has a goal to save $40,000 over time. Ali has been keeping the money at home, but recently he moved his tuition savings into a safety deposit box at a nearby financial institution. What are other options would work so that Ali's money is protected? All right, what in the chat, what would you guys put the money into so that it'll earn interest over time? What do you guys think? B, savings account, good. Savings account is good. Money market account, excellent. Savings account. All of the above, okay. All of the above. All right. Good. All right, so the general consensus seems to be a savings account. I'm surprised why nobody chose certificate of deposits. So CDs are basically setting money aside for a time period, and you actually get a higher interest rate than your standard savings account. So keep that in mind when you have something like this going on where you have a very specific purpose for the money. So it seems like you're saving money for your college fund, and depending on how old his daughter is, you may not need that money for 10 years. So you can put it away in a long-term savings vehicle to kind of earn interest for you and earn money for you in the long run. So the technical answer would probably be G. You can put it in any type of those accounts, but a lot of them has its advantages and disadvantages. CDs are timed. Savings accounts have a lower interest rates. Money market accounts are short term. No, CD is insured by FDIC. That is an account that is insured by FDIC. That's correct. The only thing on this list here that's not insured by FDIC is a brokerage account. Brokerage account involves stocks, mutual funds, that kind of stuff. Okay. Any further questions with this, and why technically you can choose all of them, but there are advantages and disadvantages to each. So it's not a real easy answer there. Right. So next question, please. Okay. Ali has saved 20,000. He is still 20,000 short of his total goal of 40,000. Ali is considering taking out a loan for the remaining 20,000. His bank has offered him two options: a loan at 5% interest for 5 years, or a loan at 5% interest for 2 years. Compare Ali's options below. All right. What would you guys think? Read it over. Take 2 minutes, read it over, and what option would you take and why? The 5-year loan, okay. Livingston, why would you choose option A, the 5-year loan? I kind of want to understand the reasoning on this. Yeah, that's a good answer. The rights. It would depend on the circumstances. So the rights actually are on the right track. It would actually depend on your circumstances on what would be best. So the reason why you would go with option A or option B. So depending on your comfortability with the monthly payment. So if you have a shorter time frame, a shorter loan term, your monthly payment on repayment of that loan is going to be much higher. Okay, so if you divide, $20,000 at 5% over 2 years, your monthly payment is going to be almost double that than 5 years, a 5-year repayment loan. Does everyone kind of see that point? So it really would depend on your actual circumstances. Now, if Ali needed the money right away, or can afford to take a long-term payment because his income is not sufficient to support the monthly payment, he may want to go with the 5-year term so that he can make that monthly payment and he's not stretching himself out. And we're going to get more into that with budgeting and everything. All right. Questions on that? No. Okay. So next question, please. And please forgive me. I usually do this in person, so I would have a lot more interaction going on this. Okay. Opening account. A lot of you already have accounts, so I'm not even gonna talk much into it. Go to a bank, bring ID, etc. That kind of stuff. Provide details. Next account, please. Okay, using your new account, you can pay bills, withdraw money, direct deposit. Most employers are going to require direct deposit because nobody wants to issue checks anymore. Earn interest, it protects your money. These are all reasons why you want a bank account. Okay, next slide. Online banking is one of the greatest tools ever made, especially for those of you who have smartphones. Online banking allows you to budget so that you never get any overdraft fees. Those are the best things to have. Online banking also allows you to take pictures of the check and it goes directly into your checking account so that you can do it remotely and you never really have to set foot in a branch. Okay, next slide, please. All right, George is very disorganized. What can people do to protect themselves? Okay, there is so much fraud out there right now, and we see it every day with fraud. The general rule of thumb is if you didn't call the bank directly and you know the number that you called, treat it as fraud, right? Because there's all kinds of scams out there that they're going to be calling you and they're going to say, hey, we need you to verify your social and your debit card number. 9 times out of 10, that's fraud. Very rarely will any banker call you and say, I need you to give me your debit card number. Okay, so just protect yourself. Be skeptical of people asking you for personal information. Just be skeptical. Most of the time, the bank already has your information, so they don't need you to verify that. They just need you to verify certain things. Okay, so next screen, please. All right, today you learned how to identify different financial institutions, how to protect your money, strategies to protect your money, and then how to choose the bank that's right for you. Okay, so next slide, please. And that's it. So any questions with banking basics? No. All right. I'm kind of rushing through banking basics because it seems like you guys are a little bit advanced for that. So if you want to go into credit scores or budgeting, can you guys reach out and let me know what you guys want to talk about next?
Yeah, do you guys want to put in the chat maybe which topic you'd prefer to hear right now?
Yep.
Credit scores, it looks like.
Yeah. Yeah. Yeah.
Okay,
Credit
great. So I'm
All right,
just
let's go to credit.
go to the credit score presentation.
Yeah.
Great.
Awesome.
Everyone can see it.
Yep. Okay, great. Okay, credit scores is far more exciting. I'm actually excited to talk about credit scores. It's far more exciting. It's far more useful, and it seems like you guys are advanced for that banking basics thing there. So, next slide, please. Okay, in this workshop, you're going to explore the importance of credit scores and reports, how to access your information, how to build and improve your credit, how to protect your credit from incorrect claims and fraud. Okay, next step, next slide. Okay, what is a credit score? Everyone knows, everyone's heard that 570, 800, great credit scores, you know, all that stuff, right? Okay, next slide. How to build credit. Okay, so everything that you do, whether it's going to be applying for a job, whether you're going to be applying for housing, you're going to be applying for a loan, most likely they're going to check your credit. Your credit basically is who you are as a character in the electronic world. Okay, it determines your reliability in paying your bills. It determines your reliability in your job and in your housing and everything. So how do you build credit? Right. Step one, you open a line of credit. Step two, you request that your payment history be reported. 9 times out of 10, the bank's going to do that automatically, so you don't even need to do that. Step three, you can open a joint account. And then step 4, never pay your bills late. That's number 1. Never miss a payment and pay your bills in full if you have the capability. All right, next slide. Anna and Bella have been friends since middle school. They both own cars and have steady incomes to pay their bills. Anna's credit score is 530, while Bella is 700. Anna and Bella decide to buy homes in their childhood neighborhood. One of them receives a loan without any trouble. The other has a difficult time getting a loan. When she finally gets her loan approved, her interest rates are higher than her friends. Okay, next slide. There are 3 main credit bureaus in the United States. Credit scores are based on the information that the credit bureaus, credit reports from these bureaus. Experian, Equifax, and TransUnion are the big 3. Now, anytime you have a loan or a credit card, whoever holds that credit card, they're going to report you for payments made on time. They're going to report you for usage of your credit. So if you have a $500 credit line and you use $499, they're going to report you for that. And that's generally not a good thing. Okay, so next slide. Calculating credit score. These are the things that go into calculating your credit score. Your payment history is a large portion of it. Your length of credit history is another portion, and the amount you owe are probably the three biggest portions that determine your credit worthiness, so to speak. So those are the big three. Now, types of credits are another big factor because like your mortgage would look far better than a personal loan. Okay. New credit is another one right there. Okay, so next slide. Anna's house. So if anyone has ever asked you to co-sign for a loan, always hesitate. And I've seen this at the bank many times where people think that they've had excellent payment histories, but because they co-signed for a family member or a friend, it actually declines them for a loan. So be careful when someone says, co-sign for me, please. I'll pay it on time. You don't know that they will. So always be skeptical about that and always be hesitant about co-signing for any type of loan. So there's a scenario here. Anna's house is in foreclosure. She has taken some steps to improve her credit, is now eligible for a loan. Anna wants to use the loan to try to stop the foreclosure process, but she has a problem. She needs to co-sign. Should her best friend Bella co-sign on a loan with Anna? And how will co-signing affect Bella's credit score? Okay. So if Bella was to co-sign on the loan with Anna and Anna fails to pay that loan, the failure to pay that loan will reflect upon Bella's credit score. So just without any fault to Bella, her credit has now been destroyed. Okay? And that goes, and I've seen it personally, and I've seen it in this situation. Co-signing will destroy your credit because you cannot manage the other person. You can't pay their bills for them. Okay, so next slide, please. Michael and Tamika are getting married in 2 weeks. They are thinking about merging their finances by opening a joint checking account and applying for a joint credit card. Tamika has good credit score, but Michael does not. Should they sign up for a joint credit card? What do you think? And I've seen this in personal situations here at the bank as well, is people will apply for a joint loan, but the bank, because one of them has a good credit score and one of them has a bad credit score, they will actually raise your interest rate because the bank will go off of the lower credit score. So be careful about signing joint loans together. Okay. Next slide. Your credit report is a snapshot of your credit profile, including your credit history. Credit reports help lenders, such as financial institutions, understand how creditworthy you are. That is, you're likely to repay a loan if given one. Okay, there's a lot there, and that basically determines everything that we do in the United States today. Okay, it's your character as a borrower. All right, next slide. Now you have rights. There are laws protecting you for your credit. You can request one free credit report every year. Okay, so it's in everyone's best interest to request a credit for themselves every year at this above website here. It's included there. And in your credit report, you're going to be able to tell if there's been fraud, if you have late payments, if you have outstanding collections, medical debt, if you've been bankrupt. So that shows all on your credit report right there. And you can get that for free. All you have to do is go on that report and then call that number. Has anyone ever used this service before? On the chat? No? No one's used it. Okay. Okay, great. Livingston. Yeah, check it. It's absolutely free. Check it, please, because there are going to be some things where you may have co-signed for one of your friends back 10 years ago, and they stopped paying their car bill, and now it's showing up under your credit. And when you apply for your own home or you apply for housing, that's going to show up as a collections. and that's going to be a problem. That's going to be a problem. Okay. Next slide, please. If you go through these companies, if you ask them directly, they will actually charge you a fee for that. You know, it can get, those reports are a little bit more detailed, but there is a fee for doing it. Okay, so next slide. Okay, your report contains the following information: credit inquiries, personal information, public records, and debt status. So public records, lawsuits, bankruptcies, judgments, unpaid taxes. Okay, those are big. If you fail to pay your federal taxes, that's going to show up on your credit report. That's going to stop you from getting any type of loan from any bank. Will instantly stop you. All right, debt status. Yes, you could do that. I believe I can get these slides, especially the credit ones. If you guys want the credit ones, we can send them out to you. Generally, I would be handing out a packet of these slides so that you can follow alongside me. But I can email it to Katie, and she can send it to the group for you guys. Credit inquiries. Credit inquiries are people who have actually hit your credit. So if M&T Bank was to run a loan for you, it's going to show up under your credit report as a credit inquiry. And that's going to stay on there for at least 2 years. Okay. Next slide, please. Important dates. When you pull your credit, you're going to have this information available for you. So you're going to have dates of public records, if you have any, dates of credit requests, so those are credit inquiries, date your account was opened, that's going to determine the age of the account, and date of delinquencies if you were late. Okay, so there's a lot of misconceptions. If you have a credit card that's due on, let's say, August 15th, and you forget to pay it until August 17th, though technically it's late, it doesn't show up on your credit report, okay? Because you have to be more than 30 days delinquent for it to be reported as a late payment on your credit report. So as long as you pay it within that 30-day time frame, you can actually, it won't show up on your credit report and it will not hit your credit. Okay, so even if you forget by a week or so, yes, they're going to charge you. Just pay it as soon as possible so that it doesn't show up on your credit report. All right, so next screen. There are credit repair agencies out there. Generally, the best credit repair is just being proactive and paying your bills on time, and you won't need it. Okay, there is a law against them, you know, falsifying their lies and stuff. Their proposals to you. So next question, please. Okay, so people who want to start the repair process, the first thing that you really want to do, can you remove yourself? No, you can't. The answer to that is no. And I since you sent it to me privately, I won't announce it here, but the answer to that would be no. Okay, so steps to repair your credit. Step 1, begin on-time debt payments. Contact your lender if you need help creating a repayment plan. Now, before even you get to step 1, you need to, number 1, request a credit report. You need to know what you're dealing with. Okay, so the first step you want to do is get on that annual credit report and request your own report so you know what's late, what's not, what you need to fix. That should be technically step 0, let's say. Then step 1, then start making on-time debt payments. Step 2, inform the credit bureaus and companies that provided information to report errors on your credit report. Sometimes for people who are a junior or a senior, your parents' credit may show up under your credit report because you have the same exact name. So keep an eye on that, and that's where having your credit report handy will be a great place to start. Okay. Any questions with the steps to repair your credit? I mean, no. All right, so next. Okay, so you can monitor your credit scores and report. I have an app on my phone that it's linked directly to my credit. You can check your credit as many times as you want yourself. So if you pull your own credit, you can check it unlimited times without any issues. Okay, without any bad judgments or any negative judgments on you. Now, if you go to a bank and they pull your credit report, that shows up as an inquiry that actually negatively affects your credit itself. Okay, so monitor your credit report and scores. You can pull it as many times as you want on your own. Pay your bills on time and regularly. And even if you're late by a week, you miss a deadline by a week, pay it as soon as possible, because if you get it within that 30-day time frame, you won't get hit with a bad credit, a late payment. Okay, get credit counseling. There are people out there who can guide you through the credit counseling process. They'll tell you what you need to pay off. They may even negotiate with some of your creditors on your behalf to lower your monthly payments. Okay, and consider financial products. So you may want to refinance some of your high interest debt with lower interest loans, consolidate your payments into one. Those are other ways you can start fixing your credit. Next step. Next slide. Okay, so there are a lot of scams out there. Beware of the credit repair agencies or credit repair consultants saying that they can fix your credit in 30 days. It's not that quick. Fixing and building a credit history takes months, if not years, to do that. Okay, so it's not an easy fix. So just beware of the people that tell you they'll promise you the world and they'll make you pay for their service, and then it doesn't happen. Okay, so the other scam is they'll make you pay an upfront fee for fixing it, and they say they're going to get rid of all the negative information. That these are all scams. All right, so if it's too good to be true, generally it is. So be careful with that. Okay, next slide. Red flags of a credit repair scam, or I say again, pay fees up front, a promise to scrub all negative information. There's no such thing as getting rid of all negative information. Okay, you just can't. It's not possible. Promise to scrub or alter legitimate information. If they say they're going to change any information that you have, it's a scam. Just walk away. All right, so next slide. Okay, these are legitimate organizations. These are nonprofit organizations that help with credit counseling. So if you have a plan in the future, for purchasing a home or for purchasing a new car or anything like that, get help, and you want to do credit counseling, get help from these organizations. These are legitimate nonprofit organizations that do great work with trying to get everyone on the same playing field. Okay. And so next slide. These are just general strategies to improve your credit. So if you have a credit card with $100 credit limit, try not to use more than 30% of that. So don't put anything more than $30 on your credit card, just so that it shows a low usage. It shows a low usage limit, and that's generally a good thing to improve your credit score. Never ever max out your credit card. Never. because what that tells the creditors and banks is that you're overstretching yourself. Obviously, pay your bills on time, okay? Pay your bills in full every month if possible, if you can. Again, pay your loans on time. Do not apply for multiple loans and credit cards at the same time. So credit inquiries actually do hurt your credit. If a bank sees that you're applying to 10 different companies all at the same time and they see 10 different inquiries, that means that you're overstretching yourself, okay? Make a financial plan or a debt management plan to reduce your debt, and create and follow a monthly budget. Review your credit report for accuracy. Always pull your credit every year if you have to, and just review it. Make sure that there's no derogatory or fraud information out there. Protect your credit. Okay, so next slide. All right, today it's important, credit's important. Everyone knows that. Your credit score is a reflection of your debt management practices. Always pay your bills on time and do not default on loans. And it is possible to repair bad credit, but it takes time. So beware of the credit repair agencies that say they can do it overnight and get you a good credit score and ask you to pay money for that. That's a scam. All right, so next slide. And that's it. Okay. So we just went through a lot there. Does anyone have any questions that I can go into further detail? Put it in the chat, please. No?
If anyone has any questions and they want to hit like the little raise hand thing, we can also unmute you.
Oh, yeah. Mm-hmm. No? Okay. Katie, we can send out this presentation specifically to them in a slide if you want to email it to the group and stuff.
Definitely, I think that would be great. Harold would maybe have their information.
Yeah.
But thank you, BJ. I think that was a great. Oh, we have a question in the chat, I think. What is the requirement to open a child's account at M&T Bank?
So we would just need your information. So you would be the custodian of your child. So we would need your personal information, your social, your ID, and then your child's birth date and social, because they're going to be the beneficiary of that account. Okay. Unsecured credit cards. So we do unsecured credit cards. Basically, it's a credit check. We're going to ask for your social, and we're going to ask for your income, and we'll pull your credit and everything like that. So that's the same with every institution on unsecured cards. Now there are banks that do secured cards. So for those of you who want to build your credit, and they want to have a major credit card so that it's reported to the agencies, there are such things called secured cards. And what you generally want to do is, if you want a $500 credit card, you can secure it against cash in the bank, and then you can actually have a credit card for $500. And every month, if you continue to pay it on time, it gets reported to the agencies that you're paying on time, and it helps build your credit. So a secured credit card is a good way to start building your credit as well. Okay. Can you have the same custodial account for 2 children? Yes, you can. Mm-hmm. You can have as many custodial accounts as you want. Okay. Katie, how much time?
I was just gonna say, I want to be cognizant of time. I mean, if people can stay on another second, we can do like a little wrap up maybe. I don't see any other questions either, so I think we're okay.
Will both parents be able to be custodians on the account? Yes, both parents can. Sorry, I put no for some reason, but yes, they can. I mean, these presentations are pretty in depth and everything, so it's a lot of information. I thank you for the time, everyone. Please don't ever hesitate. Go into a bank and ask questions from your banker. If you have a great bank, they should just be able to sit down with you and help guide you through the process, because we've all been there. We've all been there.
Thank you so much for your time, BJ. And then I was just going to see if Harold wanted to say anything to wrap up also.
Yeah, I just also want to say thank you and extend my gratitude. It's truly appreciative that you blessed us with this here financial literacy seminar. So we greatly thank you. We look forward to the next one. I know I'll get a lot of feedback from the people later on about some questions. If I have any questions, I'll shoot them to Katie. She can shoot them to you. But I'm pretty sure that I'm going to get some additional feedback. So once again, man, we truly thank you for coming in and, and truly blessing us with this seminar. It's been a blessing, and we thank you.
Great.
Yeah,
And
please. I was going to say, Katie, please put my email up, and I'd love to answer questions. Everyone should have the resources to improve their financial prospects. So please don't hesitate to email me. If I can answer the questions, I will. And if I don't know the answers to the questions, I'll find someone who does and get you those answers. Please, this is super important. Financial literacy is everything nowadays.
Yes,
It's everything.
would you want to stick your email in the chat maybe? And if anybody's still on, they can take it down. If they have any questions they want to send to you directly. Perfect. And I also just want to say thank you to everyone for our little technological struggles in the beginning. I appreciate everyone's patience.
You can also, Katie can send it to me, your email address, because I'm going to be speaking to a lot of these people after this right here. And I know I'm going to get some feedback. So it'd be good for me if I can give out your email directly to them. So someone can shoot it to me, either you or Katie.
Sure thing. Perfect. Great. Well, thank you both for and thank you for being a great audience. I hope everyone has a great day.
Guys, take care. Thank you.
Bye now.
Bye now.